The following is a presentation of TFNN, The Trader's Edge, with your host, Steve Rhodes.
Hi, folks. Basil Chapman sitting in for Steve Rhodes. Wow, after an intro like that, it's difficult to follow up. Steve is a little under the weather, as he was yesterday, and he's taking the day off. So, Steve, we're with you. We really hope that you get well very soon. Your presence is much needed here, so just get those vibes working for you, and that'll be inspiration for all of us to see you back here. So I'm sitting in today for Steve Rhodes. I'll be sitting in as well for the next hour. So the 9 o'clock till 10 o'clock show, that's Steve Rhodes' Trader's Edge. And then I'll be doing the, what is that called? I always forget. I love the name. Money Masters, of course. Money Masters. That's usually with Tom O'Brien and Steve Rhodes together, and I'll be sitting in for that. Normally, I'm here Monday, Tuesday, Wednesday, Thursday, Friday, 11 o'clock until noon. Part of the TFNN team. Basil Chapman is my name, and my service is the opening call. And that's a very comprehensive look at the markets every single day. And I use a technique that I developed over many decades, actually, called the Chapman wave. Basically what it is this. I'm showing you here a chart of this is the 10-minute E-minis. If you go to the most obvious lowest low bar, in this case it's the low of the 26th of November at 1395. And all you do is you count each successive peak. When you get to the fourth highest peak, I alphabetize them, and they're capital letters on the way up and the lowercase on the way down. So the Chapman wave is the waveform that never sleeps, because every single new high bar or low bar gets a letter, and that essentially gauges. It's a very unique and unusual methodology. What it does is it gauges the strength of a rally. It does a number of things. Besides the letters it uses, you can use technical indicators. You could have the naked chart. You could have I wonder if maybe I'll do that a little later on. I'll just take what I call a naked chart, and I'll show you what we do. So if you take that starting point in the E-minis in the 10-minute chart, this is the December contract, you go to a peak D, the fourth highest peak at 1402.50 at 3 o'clock on the 26th. It pulls back. You'll see this purplish line right here. That's the 200-period moving average. I have another little moving average underneath it, which is your clue indicator. But in this particular instance, and these are techniques that I love to teach. Now, if you look at this, there's a sudden spiral up from that low bar. The technicals, if you're looking at this technical indicator right here, this is called the MACD, MACD, the moving average convergence divergence. All this very long, cumbersome name. MACD is what we call it. That MACD is essentially a look-back period of 200, a look-back period of, 12, 26, these are the moving averages, and together they make up a 9-period exponential moving average differential. That's the green line here. And I teach how you can use that red line as a support, how you can use the green line as your faster moving average that gives you your sense of not just the direction, but when it is breaking key support. And look what happens. At that peak D, just pulls back for 3 bars. On the 4th bar, hits another moving average, that dashed line there, and it moves up and it goes to peak A, B, C, D. You get your second buy mode to a peak D. And that peak D stops right at 1407, was it? 1407.75 on the 26th at 1950. So that's in the evening, 10 to 7 Eastern time. Then what happens is there's a high-level consolidation. So that high-level consolidation, I call it the rectangle formation, can go on a lot longer than your patience. Invariably, the longer it goes, using the intraday timeframes, the greater the chance that it'll break to the downside. And lo and behold, the 9-period moving average that was great support becomes resistance. And you see that little line on top there? That shows you that there's a downtrend in play. The downtrend goes all the way to a trough. You see on the way down, I count the troughs. That's a little V-shaped bottoms. Each low one is called a trough. At least gets a letter. In this case, it goes trough D, trough E, and then trough F. Trough F is the sixth lowest trough, and what happens is the stochastic turns around, MACD turns around, and you get a rally formation. And that rally formation goes to peak A, B, C. But because it's a 10-minute chart, and because it's prior to the market's opening, this is a pattern. I usually call it a gray A, gray B, gray C, because it is under the major sell signal that was given back on the 26th at 750, and the S&P E-minis were 1407.75. Now it's gone underneath that gray line. That gray line is the 200-period exponential moving average. Look how important it is. I'm just going to squeeze this. I don't even know. I'm just guessing here. Yep, there you are. Look how important. You never once got down to that ever since you were back in that area around about 3 o'clock to 6 o'clock on the 25th. The 23rd, back on the 23rd of November. So that's how important this moving average is. Do you need it? You only need it when you're getting close to it. Otherwise, you flew up there. You're not interested in this moving average. 200 period look back. In other words, 200 10-minute bars. Now it's very important because it's beginning to hug that line. If it breaks that line, you've got to anticipate that a test of 1401.00 is next. But that's the very short term. Let's look at the E-minis in terms of the pattern that's set up in the 120-minute chart. 120-minute chart went to 1431.75. That was the peak E top, the double top at on the 7th of November at 4 o'clock. And then what happened 4 o'clock in the afternoon Eastern time, and then it comes plunging down to the low of 1340. Believe me, that 90-point drop, that is sharp. The Dow was down about 1,100 points. So this is the E-mini, comes down to 1340. Again, trough F. Look how often letters repeat, chart patterns repeat. That's what I love to teach. I have a webinar coming up. It is a live webinar. A week from this Thursday. It's Thursday and Friday. It starts at about 8:30 in the morning, goes till about 4:30, 5 o'clock in the afternoon. Go to the front page of TFNN. You'll see I've thrown in everything, made it up, the bargain of the year. Why? Because it's a 2-day webinar. It goes 2 days, and on the first day, what we'll do in the afternoon is we will discuss what the potential trades are for the next day, what we're looking at, what could work, what might not work, longs, shorts, etc. So from 4 o'clock, as the market's closing, we're already looking at what to prepare for the next day. We might even do that at 3:30 in the afternoon so that we can be prepared based on the Chapman Wave methodology. So what happens is you also get the CD, Introducing the Chapman Wave Methodology by Basil Chapman, Chart Analysis in the Stock Market. There are 476 slides. It is like a PowerPoint presentation, a very powerful presentation. It explains the terminology. I even have a glossary at the back. The glossary goes from page 458. It's about a 20-page glossary of terms. Just the glossary alone, I have people emailing me saying, that glossary is so important. But you've got chapters on what I call the falling axe, the cone formation that descends and breaks to the upside, phantom peaks. There are certain aspects that are very important, later developments that I've had that that I consider to be absolutely essential to any analysis. You can also get opposing and complementary price movement. What does that mean? Look at this. If I go to this chart right here, and I just extend it out. Let's just pull it out there and extend it out. How can you learn from that? This is the dog, and believe me, it's no dog. It is the Dow ProShares Trust Short Dow 30. And look, it's gone from a peak A, B, C, D, and it's pulled back. And here's the complementary price with the Dow. Now, how can you use this in real life? Well, in my service, the opening call every day, I discuss these I call them 5 quadrants, 5 quintiles, or whatever you want to talk about. In this particular instance, you've got the 120-minute chart, which went to a peak E and is now consolidating. And you've got the volatility index, which has gone to a peak B on the upside. And it's not a big move because it's still at 1550. But look at this. Look how I explain and I demonstrate how you get the complementary moves. In this case, I've used the Dow 30, 120-minute chart with the volatility index, the VIX index, which is running down as the price of the Dow is moving up. And I discuss these things. I discuss it in great detail as I have here. Let me show you what I've done. Let me just go to this one here. I think that's it. Coming up. Yep, there it is. So let me show you what I've done. There it is. I'll move the chart over there. Okay, yeah, we've got it. All right, I must fit into the area right there. So now look at this. Here is the Dow with the notation on the chart, explaining it, with the trend, the short-term trading index, which I've used as a Chapman wave trend gauge, which is given, I would say that it's 98% at this particular point for the last year and a half. Accuracy in predicting the following day's session if certain parameters are met, only when they are met, gives you a pullback or a rally. And here's the Dow and the S&P. And there's a discussion about it. So let's get on with the story, and I'll be right back. This is Steve Rhodes' show. This is the Trader's Edge. Basil Chapman sitting in. I'll be right back after these messages.
What type of investor are you? Conservative, moderate, or aggressive? No matter your investor personality, your overall portfolio should reflect your financial goals, time horizon, and your risk tolerance. Help ensure your portfolio is appropriately invested with an asset allocation plan from Morgan Stanley Wealth Management. Simply picking the right stocks is not enough. Research has shown that choosing the right proportions of stocks, bonds, and cash is essential to the success of your long-term investments. Morgan Stanley believes a carefully selected portfolio can lower volatility and increase investment return potential. Find out about what an asset allocation and a Morgan Stanley Wealth Management financial advisor can do for you. Call Angela O'Brien, First Vice President and Financial Planner of the Clearwater, Florida branch at 727-441-6108 today to discuss your personal financial needs. Asset allocation does not assure a profit or protect against loss in declining financial markets. Investments and services are offered through Morgan Stanley Wealth Management, LLC. Member SIPC.
With the launch of TigerTV, TFNN has brought our programming to the next level. With TigerTV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, Ken Shreve, David White, Larry Pesavento, Victor Jones, or Daryl Martin, you can catch all of our technicians hosting their programs live and archived on TigerTV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out TigerTV, then visit TFNN.com and see what you're missing.
Millionaires are made every day. The fact is, living your dreams is possible. Someone, somewhere is going to get rich. My recommendation is, let that be you. Each day, someone is making the decision to better themselves and creating a plan to fulfill their financial dreams. Let that be you. The key to turning dreams into reality is to take massive action. Let that be you. I'm Steve Rhodes, co-host of the Money Master Show with Tom O'Brien, seen daily at TFNN, and I can help you with your journey to great wealth. I'll show you how to create the ultimate financial edge, a set of tools, insights, and strategies that are part of my daily newsletter service, Mastering Probability. You'll have direct access to me by phone, email, and my private library of trading and investing secrets for 30 days with an unconditional money-back guarantee. I'll take your trading to the next level. Click on my name, Steve Rhodes, on the homepage at TFNN.com and turn your dreams into reality. Mastering Probability, folks. Let that be you.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pesavento's new trading newsletter, Patterns, Profits, and Peace of Mind. In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the forex market, and more. And you'll get the Technical Corner segment, which is a short but powerful weekly training session on trading. You'll you'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you just the edge you've been looking for. Try patterns, profits, and peace of mind absolutely free for 2 weeks. Go to tfnn.com and click on the free trial link at the top of the page. That's an $85 value, yours free when you register right now. Get Larry's patterns, profits, and peace of mind and get the edge you've been looking for.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. This segment is brought to you by BackTech Environmental. For more information, just click the BackTech banner on the front page of TFNN.com.
It's always better when we're together. Yeah, we'll look at them stars when we're together. Well, it's always better when we're together. Yeah, it's always better when we're together.
Charts as the market opens up. We can talk about what I'm looking at, why I'm looking at it, etc. Now, what my work says that very big arch formation that we were tracking for my subscribers in the opening call, and the techniques that I'll be teaching on Thursday and Friday, a week from this coming Thursday and Friday, you're right here live. I mean, you can be in your office, you can be anywhere in the world, and you can you know what's so beautiful about these webinars? You can replay them over and over. And my webinars there's so much detail in them that I love for you to go back and just review what's going on. Why? Because there is a kernel, there is a nugget, there is a technique that is so potent that from that comes the Chapman wave, other techniques. And that technique says from the most obvious lowest low bar, look, this is from my opening call, my subscribers got this morning, from the very first V-shaped bottom that has certain characteristics. If it goes to peak A and then B, the moment it crosses C, you can go from a buy signal to a buy mode, with the implication being, and this is a forward-looking technique, to at least a D, but it can still go to an E and an F and occasionally a red G, and that the most important thing I teach in the beginning is to go to D. If you could, I have people that have emailed me for years now saying, we only get the buy signal to D and we're out. One person in particular he's been doing this for golds, all the gold stocks. He's been doing it for maybe 6 years now, maybe more. And all he does, he gets the buy signal, and as soon as he's confirmed that he's got the buy mode, he just lets go, leaves it, puts in his stops. The moment leg D starts, he starts taking off. It could go double. It doesn't matter. He's done this over and over, and he's built up a beautiful nest egg. Now, what I would like to do is just to explain that this is what I call the naked chart. There are no technical indicators here those are technical tools like the MACD, stochastic, or anything like that. They're just lines and arches and cups. And in this particular instance, you can see from the 12,471 low in the Dow, we've had a powerful leg A. Now, this is what I showed subscribers today, and I explained it. The match between the turnaround back on the 4th of June with that V-shaped turnaround and the V-shaped turnaround that is possibly unfolding now, certainly it's a V-shaped turnaround, but a V-shaped turnaround that has substance to go to B, C, and D, as this one did when it went to the high from the 4th of June low, 12,035 in the Dow, to the 12,961 high a month later on the 5th of July. So what we're looking at here is to be able, you had 1, 2, 3, 4, and on the 5th day after the low of the 4th of June, that was a consolidation day, made a new high to leg B, then pulled back to that red line, the 9-period exponential moving average. And here what we've done is we haven't yet gone close to 12,855, the 9-period exponential moving average, but it is a peak A because there was a lower high bar. So this is called a floating letter, that A. I'm giving you a little lesson here. And that's A, leg A, leg A, leg A, leg A. Yesterday confirmed peak A. Why is it a peak? Because the high of 13,011.45 saw a high yesterday of 13,008.45, 3 points lower, and that makes it a peak. All this has to do is to go to 13,011.46, 1 penny higher, thousandth higher, and it goes to leg B. That's the technique. That's the beauty of this particular technique. So, now what we're going to do is say, hey, what does this need to do? What does the Dow need to do to be able to fulfill at least the next step, which would be to say go from a buy signal to a possible buy mode in the Chapman wave? Well, I need the MACD and the stochastic, but let's leave that aside for now. What it says is that if this particular candle, which is a candle that I call the Roman candle, why? Because it looks like a Roman candle. It's got a long, thin wick at the bottom, and it has a high, and the high was, it opened at 13,008.30, and it went fractionally high to 13,008.45, 15 cents. So there's a tiny little wick there. It drops sharply and then closes over 50% of the body of the whole candle. And that says, if perchance there is a pullback today to the 12,930 to 12,920s, there's a good chance it will retest the low of the day, 12,900. If instead there's an inside day and it starts to climb later in the day, there's a good chance we make leg B up tomorrow, if not today. So I'll be back, and the market will be opening very soon. Be back with you straight after these messages.
It's always better when we're together.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. You've heard Tom O'Brien on the air, and you've seen him on Tiger TV, as well as being featured as a regular CNBC guest and contributor, and now you can have access to his expert trading advice each morning through his daily trading newsletter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, gives traders, investors, and money managers a thorough strategy for trading stocks, options, and indices every market day. Market Insights comes out each market day before 9:30 a.m. and provides traders with Tom's daily commentary, opinion, and specific trade recommendations on the markets. Using advanced Fibonacci methods, volume indicators, Gartley patterns, candlestick charting, gaps, and market timing, Market Insights will give you specific trade recommendations including entry, stop, and exit prices. The summer is over and traders are back. Get your 2-week free trial to Market Insights today by visiting the front page of TFNN.com. If you're an investor looking for a great weekly investment newsletter, then now is the perfect time to try out Ken Shreve's Ultimate Growth Stocks. Every Tuesday, Ken breaks down multiple sectors in his weekly newsletter, Ultimate Growth Stocks, with a full in-depth report including specific trading recommendations within his model portfolio, charts, sector analysis, upcoming economic data, along with intra-week trading updates on newsletter positions whenever the market dictates. Right now, you can receive a full month, that's 30 days, to evaluate Ken's newsletter free of charge to see if it fits your trading plan. At less than $75 per month, Ken provides you with his expert trading advice that can pay for itself in no time. Take advantage of this great offer by signing up for a 30-day free trial to Ken Shreve's Ultimate Growth Stocks today. Don't let this offer pass you by. Visit the front page of TFNN.com and sign up now. Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
It's always better when we're together. Yeah, we'll look at them stars when we're together. Well, it's always better when we're together. Yeah, it's always better when we're together.
There it is, the bell. The markets open. The Dow's down 29 at 12,939. The S&P's down 246 at 1403. The comp index, let me just go there. The comp index, oh, it's right there. Comp index is down 5 at 29.71. Gold is down 4, almost 5 at 17.44. Silver's down 13 at 34. Platinum's up 87 cents. And we've got high-grade copper down 65 at 3.53. High-grade copper. Let me just get this high-grade copper. HGZ, yeah, I made a big deal about copper. If copper is able to climb above 361, it's at 3.52. If it's able to climb above 361, I'll say, great, now we've got another U-shaped pattern because patterns repeat over and over. But if it starts to fail and copper goes underneath 345, it'll test that 340 level, and that will be not good. Not in terms of the economy, because I think this is very important. This is the world economy. So I'm watching that very closely. But also, most importantly, bonds. Bonds are the TLT, the 20-year T-bond fund is at 125.01. If you're looking at let me just explain. If you're looking at the charts right now, I use black background, but I also use white. One of the reasons why I use white background, I love the black because I can see it so quickly and clearly. I've just done it for so many years. But the white is printable. And people have always said to me, oh, you got these great charts. We'd love to just print it out and study the Chapman wave, study what you're looking at. So, I've started switching over. I haven't made a complete switch, but I'm working on the different colors and etc. So it's in process. It's a work in progress. And so the TLT, which is the Lehman 20-year T-bond fund, is up 19 cents at 124.99. It's making a pretty good high-level consolidation in the weekly chart. Let me just move this over. You can see this is the weekly chart. I drew that rectangle in a long time ago. It's in the upper range of the rectangle. In fact, I could even move it up now. So it's just a very large rectangle formation, and that is confirmed in the monthly. Now, what's really important, I have an alternate wave count. I need just to go to the white chart for a moment. I'm going to go back. There was a question in the den. If I would go a little further, to go further in the discussion on what would give a buy mode to the Dow based on the Chapman wave methodology. But there's something that's very important in my work. If after a buy signal, the low bar that starts the buy signal is pierced by even 1 penny, it basically negates the buy signal, and you have to start over. You could start over the very next bar and get a new buy signal. But the old one, all the letters get erased. It's not erased, but you go from an A to maybe a B minus or a C minus because they fail to get to D. Now, what's very important is that the TLT, this is a very long-term monthly chart, and the 87.56 low after the peak F top at 123.16, 15 back in 2008. Well, what we're looking at here is it pulled back to 87.56, started what looked like a buy mode, and then it failed because it went down to 87.30. Now, once again, this is a monthly chart. The TLT is not the route. The route I want is the U.S. 30-year T-bonds. So this is a derivative of that. Therefore, I have to keep in mind that there is a chance that the real buy mode started not where I've got the up arrow right here at 87.30, but right here where I've got a question mark. I'm going to make that question mark bigger. This is really important in my work. You do not ever have a methodology if that methodology is form-fitting. If constantly you're saying, oh, but then if this happens, such and such. Oh, but if that happens, such and such. No. What you want to have is a move that goes to the ups, that starts in this particular instance, and it's always the same methodology. Within the confines of that, I have a technique that goes to the fourth highest peak at peak D. There's a methodology that says you can go higher and you can have parallel wave counts. Nothing wrong with that. It just says if this or if that. Nothing to do since everything's positive until such a certain time happens, a certain set of parameters are met. There's another thing that's called the Chapman wave flat base restart. And that says this is where there's a variation of that. You know, there's Beethoven wrote a set of variations. Glenn Gould, a very famous pianist from Canada back in the 50s, made these very famous recordings of the variations. There's a movie on the variations as well, on Glenn Gould. So variations occur when you've got a theme. And with it, jazz is just full of improvisational material. You know, talking about inspiration, when I was a kid, Jackson Pollock, an artist, and Ornette Coleman were my inspirations for breaking out of the mold in whatever I was doing. So, Steve loves to talk about inspirational moments. Well, that, and together with, I was a sprinter actually in my youth, back in high school, and Jesse Owens, I had read about Jesse Owens, famous American athlete, and he was my hero. He was my inspiration. So in this particular instance, we're looking at a variation of a particular form that is very unusual, that you go in a monthly chart, you break by 26 cents, the previous low. So if that's the case, then we could have made a peak D in the TLT, and all of this is a consolidation within a potential sell signal if the MACD breaks, if the fast-moving average of the MACD breaks down. So far it hasn't. The stochastic has dropped under 80% to 78%. But if the old way is the way that I have to be strict with the rule that 87.30 was the low, we made a peak C and we're waiting for a peak D. That implies that this market is going to take a big, deep breath at some point in the next couple of months. So I just wanted to show that was my thinking here on the TLT, and that right now the evidence is that the weekly chart, that's this one right here in the middle. So back to the charts. The one on the left is always, this one here is always the daily. The one in the middle is always the weekly. The one on the right is always the monthly. That's how I show my charts to my subscribers. Now, what's very important about this is that you see it looks real close, but there's an up channel. I call it an up track. It's a channel within either a channel or, in this case, declining or narrowing wedge formation. And that says if bonds are, if the TLT is able to break into the 126.16 or higher area, it's circumvented the buy zone that could also be a breakdown zone, because if the TLT goes under 120, closes under 122, it's broken that red line support. That green line support is within there. If you get a buy signal, based in this case there is a buy signal, that buy signal says that if the price goes well above that green line, it's very successful, and there should be a rally, in this case in the TLT, towards this particular line here, the dashed line. That's the inside track sell zone, because every time it's gotten to this area, that's been the reversal area. Reversal or sell zone. Doesn't mean you have to sell. It just means this is where you've got to be careful. Why? Because every once in a while, it breaks out to the upside. So what I've got here is I've got a situation where on Friday at 4 o'clock, this is a weekly chart, these are the ifs, if the TLT is underneath 123.60, it's at 124.90, but especially if it's under 122, it's got a 121.80. I want to see it definitively break that line. That's going to be a negative, and the MACD will probably deflect lower. At this point, it's not really crossing positive, so I've got to watch it closely. That's one of the reasons, that and the volatility index are one of the reasons why I want to, at this particular point, let me go to the black chart because I've done the notation of the volatility index. This is the kind of work that I do. Show subscribers every day, all these different patterns that are pertinent to what we're looking at that particular day. Look at this is the volatility index, the monthly. Look, even here it went to the peak D. Look at this, from the low of 16.53 back in August of 2000. The S&P, the VIX went peak A, B, C, and then in August of 2002 went to 45.06 peak D, and then pulled back where all the way back into the teens, and then way below into the 9.39 area low. That was the low of December of 2006. And what does it do? Peak A, B, C, D. How often? I couldn't even tell you how many thousands of times in the times that I've been here on TFNN, well, over 9 years, I think. I've shown you these peak Ds as potent. And what's happened now is the volatility index is way underneath the 9-period exponential moving average, that white line there. It's at 15.24, and that denotes buying pressure. So for my subscribers in my opening call, we were short all the way down for the last decline. We had a couple of longs. One particular long that we've still got is making, I don't know if it's done it today, but yesterday it made a 52-week high. So what we did is we had very nice gains in the shorts. I had said about 2 Fridays ago, I said, this is for swing traders. Take profits here. I think that some of these have the potential to go even lower after a bounce, but we will still lower our buy stop so that no matter what happens, we make profits in all our shorts, which we've done. We've made profits in all the shorts. We have no shorts right now. We only have longs. I added to the longs. I'm trying to add to the longs. Yesterday, I wanted 2 stocks. The market pulled back sharply intraday. The stocks I wanted were so strong that they ran very sharply high. We missed getting them. I'm trying again today to get stocks on the long side. Why? Because this volatility index is telling me that regardless of what the buying, what's being said, the buying pressure is extant. It is there. You cannot deny it, because when I discussed the volatility index previously, I discussed it in terms of when the volatility index eventually goes under 20, we will see a lot of buying pressure, especially in the mid-teens. Well, that's exactly what we've seen. But this last decline of 1,000 points and about almost 90 points, 100 points in the S&P, didn't see the VIX even go into the 1980s or 20 level. It went to 19.56, 19.65 was the high on October the 23rd. Look at this, it's even fading right now. So I have something that I call the 3 bears. It's VIXY, Dolly, that's the dollar. So VIX is for the volatility index. Dolly is for the dollar, and the dollar made a peak E. Twice it's made a peak E in the Chapman wave, that arch formation, and then the big extension up to 81.46. Let me just type in 81.46, 81.46, 81.46, right there. And now it's pulling back. So that's VIXY, Dolly, and Bondy. And I just discussed that bonds, right now, the TLT is down. Oh, it's up 6 cents, but it's not acting very strong. So what we're looking at here, my bias, at least for now, is towards the upside. So as long as the 3 bears are working in concert and not showing big signs of strength, that says that money could flow into the market. Now, let's go to the details of what I was looking at before. I'll use the black and white chart on the daily for the Dow. You see that bluish gray line right there? That's the 200-period exponential moving average. You can see that every time the Dow went below it, it sprang back up, and then you had that fabulous move to that peak F-top at 13,661 back on the 5th of October. Then what's happened is come down trough A. Remember on the downside in the Chapman wave, lowercase, trough A, trough B, trough C, and then trough D at the bottom. So on the way down now, we've had 4 troughs to the downside. Look at the stochastic, that beautiful W formation, and the stochastic right now is still showing strength, but it needs to, it's at 56%. I teach what levels to look at in the stochastic as potentials to upgrade a buy signal to a buy mode, and in the downside, a buy signal to a sell signal to a sell mode. And in this particular instance, I've not yet got a buy mode confirmation because although there was a fantastic move from 12,471 to the 13,011 level, it's all in a single leg A. I have a technique that I call the single leg A syndrome. There are times when the futures in the morning suddenly power higher, and it's just a single move up because 8:30 a.m. Eastern Time, the news comes out. By 8:36, that rally has fizzled and has come all the way back. That led to the development of what I call a single leg A syndrome, which means that if the price pulls back more than 60% very quickly, you've got to be careful because you're going to have to start either a brand new buy signal, which will take a lot more legs to go up, or you're going to have a failure and it's going to go below the starting point. Now, let's look at this. Why do I think that this is a leg A that should go to a leg B? Why did I go long the index? Because I believe that the 200-period moving average and the 9-period moving average are very key indicators right now. And I'll discuss that as soon as we get back. 877-927-6648. I'd love to get your call. If you're new to all this and it's kind of a little bit too much information, keep it simple. Peak A.
You take a hands-on approach to managing your investments, and whether you're bullish or bearish on U.S. Treasuries, the ETFs from Direction Shares are there to help you magnify your perspective. Bull ETFs for a rising market and bear ETFs for a falling market. Direction Shares gives you the tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foresight Fund Services, LLC. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Recently, Basil Chapman has had some outstanding trades in his newsletter, The Opening Call. Each morning by 9 a.m., Basil uploads his newsletter to the TFNN servers so that his subscribers can access his expert trading advice. Basil gives his take on the direction of key indices and updates any active trades that his subscribers are currently in. Just recently, Basil's subscribers closed out a short position in Chipotle Mexican Grill, CMG, for more than an $86 profit per share, over a 20% gain in just one position. If you'd like to check out Basil Chapman's newsletter, The Opening Call, then visit the front page of TFNN.com and click Trading Newsletters. There you'll find Basil's newsletter, The Opening Call, where you can request a free sample copy. Also, don't miss Basil's program, The Tiger Technicians Hour, Monday, Wednesday, and Friday, 11 a.m. Eastern on TFNN.
In just December of last year, the price of gold was down over 10%. In today's highly volatile gold market, you need someone in your corner that understands the complex relationships that exist within the price of gold, as well as within a variety of gold equities. Whether it's the South African gold miners and knowing how the rand-dollar relationship will affect their bottom line, or understanding how John Paulson's $5 billion trade in the GLD can move the market, Tom O'Brien gives you the direction you need to become a better trader each week in his newsletter, The Gold Report. With over 20 individual equities covered and almost another 20 on the potential watch list each week, in addition to covering the XAU, HUI, GLD, and dollar, The Gold Report is a great source for any trader that is looking to be diversified in today's volatile gold market. For your 30-day free trial to Tom O'Brien's Gold Report, log on to TFNN.com today. Don't miss out on this great offer. Act now.
This segment is brought to you by BackTech Environmental. For more information, just click the BackTech banner on the front page of TFNN.com.
It's always better when we're together. Yeah, we'll look at them stars and we're together. Well, it's always better when we're together. Yeah, it's always better when we're together.
Down here. GCG 13. I'll be back to it in a moment, but what I want you to do here is the question I was asked in the den. Folks, the den is just a fantastic medium. You can see that folks are watching me do the notation on this particular chart, the gold chart, just a moment ago live. Now GCF 13, not GCG. GCF didn't give me much information. GCG gives, no, I'm going with GCG for now, for at least for analysis. So I wanted to just go back to the Dow because the question was, hey, I spoke about a buy signal. What would give me Basil Chapman, that is, a buy mode, which is really important because the buy signal is just starting. It's the torque. I call it the torque. You know, if you have a car with gears, put into first gear, they give, or if you've got automatic, that initial first gear. Of course, you can't talk about it too much today because you've got these, you've got the variable gears, so that they smoothly go through they transit through 1, 2, 3, 4, 5, 6. So this is different. It's that initial thrust that gives you. And in fact, I had an email today. I've been asking people you talk about a crash. You know exactly what a crash. Crash means smash to the downside. What's the exact opposite? Because it happens on the upside as well. You know, you look at these charts. I talk about price time, taking an arch or a cup formation. Same number of bars to the upside, same number of bars to the downside if you can find the plumb line in the middle. So Larry from Michigan said, hey, how about explosion? The markets on Friday exploded to the upside. I love that. I've thought about that a lot. The explosion is great because it can happen from a higher level, can happen anywhere. The only thing about it is you've got to use too many words. Crash says crash. Explosion, you're saying explosion, is that good or bad? You know, I want something that just means positive, massive move to the upside. So I'm still thinking about that. So back to the story. In the Dow, what would constitute the buy signal to the buy mode? Because buy mode means the implication being we should see legs C and D. The buy mode goes to a D. That's the Chapman wave methodology. And that's what I teach in the webinar that's coming up. All these, how you can use candles. What I developed this whole thing over a year ago about the silent signal, about dojis that are silent. You don't see them. You could scan for them. You won't find them because they're difficult to find because they don't occur where you expect them to. And the same thing with the round numbers. Well, look at the Dow. The Dow right now has got a nice little green candle, but the day's barely begun. We're an hour, half an hour. We're not even half an hour into the day. If the Dow spikes above 13,011.45, 1 penny above, and that's leg B. But spiking above and holding, in other words, we're up 3 right now. But if the Dow is able to get to a plus 55, plus 65 by mid-session, That would be really positive, and then I would be going from a buy signal to a buy mode with one ingredient missing, but enough positives are here to say that there should be a test in a V-shaped formation of the high of 13,290, the high of the 6th of November. And that would mean that I want the stochastic, which is only at 56%, to get over 80%. I teach which levels and why the levels are important in this webinar. Go to the front page of TFN. You know, this is all about education. And education is something that is absolutely core to what I do all the time. I educate my subscribers. I explain what we're looking at. So that would constitute for me a leg B, then a peak B, then a leg C, peak. It doesn't give you the height. Other techniques give you the height, but it gives you the forward-looking motion of a buy mode. So I hope that's helped you. I'll continue with this theme straight after this. I'll be back for the Tom and Steve show straight after this, mastering wait, I always have to look up the name, Money Masters. I'll be back for that show straight after this. Basil Chapman sitting in for Steve Rhodes, coming right back after this break at 10 o'clock Eastern Time.